Good afternoon, everyone. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people.
Exciting day today, FOMC meeting with summary of economic projections updated. Powell, you can see there at the podium. Thought he did a pretty good job today. Thought he seemed confident. He's happy with where things are. And today we're going to go over what the new summary of economic projections look like, how they compare to June, what this might mean for the future moving forward in relation to stocks, investing, where are things going. Let's dive in. All right, I got the S&P 500 on the 5-minute chart in front of me here. Right at 2 o'clock Eastern, we saw this dump, a little bit of a pullback, and then Powell started talking. We got this sell-off into the close, and this is where we sit. So let's take a look at the new summary of economic projections. All right, here we have the update, summary of economic projections. Some interesting things on here if you haven't seen it already. A couple things to note is that GDP came in with expectations higher than the June projection, from 1% all the way up to 2.1%. And the 2024 projection is that GDP will be up 1.5% next year. That's up from 1.1% projection in June. Unemployment, they don't expect as significant drop in unemployment anymore. You can see unemployment rate for the end of this year, 3.8%, and for next year and the year after, even 4.1%. So they don't expect a significant change in unemployment. Maybe like we were thinking back in June, it would be much worse. The PCE inflation and the core PCE inflation didn't get much of a change. And actually listening to Powell going through the speech today, I think he actually felt pretty comfortable with how inflation has trended. I even have him quoted here. The June, July, August core inflation have shown significant decline. So he's pretty happy with that. And the expectation for the end of the year for core PCE, is which the Fed likes to look at, is 3.7% and getting down to 2.6% next year, not hitting that long-term rate of 2% till 2026. So I think Powell said 2% at least a half a dozen times during this speech. He made it very clear that the goal for the Fed is still to hit 2% long-term, longer-run inflation targets. One meaningful change you can see on the bottom here, we look at the federal funds rate. So the 2023 funds rate hasn't changed at 5.6%. So that would mean that either in one of their last two meetings for this year, they could see that one more 25 basis point rate hike. So we'll see if we get that. But for 2024, you saw a 50 basis point increase in the federal funds rate. And same goes for 2025. So they expect rates to stay higher for longer to try to tackle inflation moving forward. And that means there'll be more restrictive policy throughout as Powell tries to get that inflation down back to his longer run rate of 2%. This is a simple chart I put together of their prior forecast going back to their meeting from March 2022. And what I'd like to highlight is the yellow vertical lines. And so you can see over the past year and a half, as we move from the top to the bottom, these are their projections for GDP for the end of 2023. So back in March 2022, it started at 2.2%. but all the way down to 0.4% in March of this year. So they were really thinking we were going to get a lot of tightening, we were going to get into a recessionary period, but that has changed, and now they're projecting 2.1%. And remember, the Atlanta GDP now currently forecasting Q3 GDP at 4.9%, so that's pretty robust. All right, I just had to fix that bottom unemployment number. So you can see that the unemployment, similar to the GDP, but inverse relation there, was trending up, and now their expectation is for 3.8% for the end of 2023. PCE data has sort of had this slight increase the last few months. Again, we see the oil prices rising, higher credit card debt, student loan repayments starting. So there are some indicators that the economy could be headed for more restriction and a slower pace. And the core PCE, which the Fed loves, actually ticked down from last meeting to this meeting. Expectations for the year at 3.7%. So like I said, I thought Powell looked comfortable. He seemed happy with where things were at. He made it very clear that the long run rate of 2% is still what he is expecting. He commented a lot about moving more cautiously, taking in the incoming data, not being overly aggressive. He had got quite a few questions about, why they decided to pause now versus considering hiking later. And again, in typical Powell fashion, he said, we'll look at the incoming data. We're monitoring it month to month, and we'll see what happens. So he did mention that the full effects of their tightening have not yet been felt. So there's probably still more to come, but that economic activity is expanding at a solid pace. The other thing is he mentioned the consumer quite a bit, and that the consumer was robust. If I remember correctly, he mentioned that at least 2 times. And he did reiterate on several occasions that they are committed to getting back to that 2% inflation rate. At one point, he did comment that a soft landing was not the base case, but then later on in the during the question period, he mentioned that soft landing is the goal. So he wanted to make that very clear. He did talk about energy prices, and the view on that is more that they're waiting to see how long and sustained energy prices remain elevated. He made it clear that this does have a negative impact on consumer. It does have a negative impact on long-term inflation expectations. But again, he was sort of cautious in saying, well, we'll see how long these rates or these oil prices stay high and how much effect that will leak into the economy. And he looked at, talking about consumer credit card debt, loan repayments, possible lockdowns with the government. Again, he said, we don't really have a policy on any of that. We'll take the data as it comes in, and it's hard to determine how those might affect the economy. And I thought it was kind of funny. He mentioned when asked how accurate the forecasts were, he did comment that it's very hard to be an economic forecaster, and that forecasting is highly uncertain, so really should be evaluating it from meeting to meeting. Bottom line, he made it very clear that his number one goal is to restore price stability. He basically said that if we're unable to do that and inflation gets out of control, then it will be miserable for everybody. And I think that makes sense. There's concern for recession. There's concern that we can have quite a bit of economic slowing in 2024. But right now, the data is not showing that. And that's somewhat of a positive signal. So far, consumer spending's holding up. So far, GDP is holding up. Labor markets are remaining stable as well. So we'll see how things play out over the next several months into the end of the year and see where we're at going into 2024. So what do I think in terms of how this is going to affect the stock market, where it's going to go from here? Well, I know Bank of America just raised their year-end target to 4,600 today. I think there's a lot of positivity in the market. I know we got a sell-off after Powell's speech today. There's been a bit of a negative decline on the S&P 500 the last few weeks. We see more of a sell-off in tech stocks. But I do think overall the market appears reasonably stable. I'm not looking at any major moves in the next few weeks. September, especially these last few weeks or 10 days, have historically been a bad time for the market. So I'm certainly not diving in, buying up a bunch of stuff. But if I see a stock that I like that's undervalued, that has good long-term potential, I'll do that, certainly continuing to contribute to my retirement funds. And I think the S&P 500 right now looks to be trending higher into the year end, although things can change. We'll take it week by week, and I think once we get into 2024, we'll have to reassess and go from there. But for now, FOMC meeting, as I tweeted out and mentioned previously, not a big surprise today. Pretty much what we were expecting from Powell. We did expect that long-term fund rate to stay higher. I was a little bit surprised with the GDP number of 1.5% for 2024. I thought maybe that would be a little bit lower. I don't really look at the 2025, 2026 numbers because historically those haven't been very accurate, as Powell alluded to himself. So we'll see how that goes. But I hope you enjoy this video. If you do enjoy the content, like, subscribe, give me a comment, let me know what you think about Powell's speech today and the FOMC meeting, and we'll catch you in the next video.